So RapidProtect IUL is protection-focused IUL. It does not mean that there's no cash value. There is cash value, but it's designed for protection, okay? So if your clients are looking for maximum growth, you might want to go with the Flex Life or the Peak or Summit Life, one of those. This one's designed for the death benefit. It does have all of the accelerated benefit riders, the living benefits, and it has a 15-year policy protection period. So as long as you put in, as long as the client pays what they're calling the Rapid Solve premium, it will be good for at least 15 years, okay? Now, hopefully it continues to go and it should be fine, but it's going to illustrate till age 120 like normal, but it's got a 15-year protection period, okay? Streamlined illustrations, fewer health questions. The policy can be bound within minutes, so you could sit there and within a few minutes have a policy, and then delivery all can be done in one sitting, all right? So the age range is 0 to 60. They still do nearest birthday, okay? So whatever nearest birthday is, that's why the date of birth is so important. You still need that. Death benefit is 50 to $500,000. That's it. So if your client's looking for $1 million, you can't go here. They do a level and increasing death benefit, just like normal. The minimum premium is at least $10 every single month. There is no preferred classes. So if you have a client or a prospect that you know has preferred health status, their health and their livelihood is above the average person, you can go here, but just know you're not going to get preferred pricing because there is no preferred classes on this RapidProtect, but they will go down to Table 4, which is a substandard rating. So again, nothing preferred, but there are a few substandard. It has a 15-year surrender. Those of you familiar with their Flex Life, the Flex Life is a 10-year surrender. So this is a 15-year, which is why you have that 15-year protection period. You can get policy loans via the cash value and same living benefits. Like I said, they are positioning it as a term alternative. Is it going to be more expensive than term? Yes, it will be, but it won't be significantly more that like the Flex Life would be, because again, this is designed for protection. So who is it for? Anybody that wants to be digital based, okay? Because everything is digital from beginning to end to delivery. It is all electronic, no physical exam, immediate coverage right away. But you can kind of look here at the age range in the 20s. Maybe it's a first time buyer. They want some accelerated benefits, but maybe they just don't have as much disposable income as they would like. If they're 40s to 50s, maybe it's mortgage protection. They like the living benefits. And then 50 to 60, more so about locking in the permanent coverage with those benefits, okay? So we can still cover everybody within that range, but this is the ideal client that NLG is looking for when it comes to the RapidProtect. Comparing the RapidProtect to the Flex and the Summit Life, all right? Like I said, Rapid is all about death benefit. The Flex Life is death benefit, but it's also cash accumulation, okay? So those people that want the cash value, they're looking for retirement or supplemental retirement income, Flex Life is still the way to go. The RapidProtect is primarily death benefit. We already mentioned that with RapidProtect, the standard underwriting class where the Flex Life, you can get preferred rates. The indexing options, it's only the S&P 500 on the RapidProtect. The Flex Life and the Summit have a few others like the Paysetter and the Balanced Trend. RapidProtect doesn't have as many of the riders. It still has ABRs and it still has the overloan protection, but the Flex Life is obviously going to have the full suite of riders to be added if needed. It's going to be minutes with the RapidProtect where the Flex Life can be days. Now, I don't want you to get confused. National Life still has easy underwriting for like the Flex Life, so you can still get the Flex Life through quickly depending on health. All right, depending on the application, it's still going to go through an automated process, but the RapidProtect, everything's automated. Now, the RapidProtect, for those of you in South Texas, you have to have a social. If you have somebody that doesn't have a social, they have an ITIN, you need to go Flex Life. All right, got to have a social to do the RapidProtect. The surrender period we've already mentioned is 5 years longer than the Flex. but it has a policy protection period that's also 5 years longer than the flex. The owner has to be the same person. So this is not, you can't use the Rapid Protect for a situation like Keyman or executive bonus types plan designs. It has to be the exact same person, and you cannot convert it from the term. So anybody that has an NLG term that wants to convert can't do the Rapid Protect, got to go Flex Life. But you remember, whenever you do a conversion, you don't have to show proof of insurability. You just move to the new product at the higher premium, okay? Now, here are some disqualifying medical conditions that will not allow you to apply with the Rapid Protect. This is not a list of people that would be denied, okay? I want you to make sure you understand. These are not things, oh, if they're diabetes type 1, they're denied. It's not a denial. It means that they don't qualify for the Rapid Protect process. So you would need to go with the Flex Life or the Summit or their FUL or their Whole Life. You can't, these are, again, it's not a denial, but if they have any of these, it disqualifies them from the Rapid Protect process. Okay, so take a good look, make a note, take a picture if needed. I want to sit here on it just because, so that way you have a couple of seconds to take a picture. All right, I'm going to move on. Now, these are the same thing, but these are non-medical. So if they have any of these, it just means they cannot apply with the Rapid Protect process. It does not mean they would be denied. It just means they need to move on to a different product. They need to go to a full underwriting product. And the Flex Life, even though it still has easy underwriting, is still considered a full underwriting process. Doesn't mean medical is required with the Flex Life. They still have easy underwriting, as I've mentioned. They just don't qualify for the Rapid Protect process. Okay, so let's talk about illustrations. Obviously, illustrations connected to the EAP, so you can still, just like you do now, do the illustration, and if they like it, they still will have that green button on the side that says send to the EAP, okay? We talked about there's only 4 rate classes. It's either standard or the 4 below. You can't change the ownership because, again, it has to be the same person unless it's a juvenile. Otherwise, it will not be able to go directly from illustration to EAP. So don't change the owner. If you change the owner, it won't integrate directly to the EAP, and the premium mode has to stay on monthly. So if you change it to annual, it won't work. It will not connect to the EAP. Doesn't mean you can't pay annually. It just doesn't integrate directly to the EAP. They're going to default to their rapid solve. I'll show you what that means here in a little bit, but that is the premium that will endow the policy to make sure that it lasts at least those 15 years and more than likely even past that. If you want to change that premium, you can. You just click none and change it to target or set the premium however you want. Again, I'll show you how to do that here in a minute. And then the only other thing you have to do is you do have to go to the interest rate screen and put something in the allocations. If y'all are familiar with the Flex Life defaults, I believe, to the pace setter, 100% pace setter, and then if you want to change it, you change it. Well, on the Rapid Protect, it doesn't default to anything. You have to go in and put, I want 100% of my money in this strategy. Again, I'll show you how we do that here in a minute. Now let's talk about the application process. You do everything via EAP, all right? Just like every other NLG product, you can do it directly from the agent portal or the illustration, as we've already mentioned, okay? The EAP will have the same default fields that make sure you complete everything. So again, picture yourself doing a National Life application and how when things are red, it says that means that's something you need to do, or if it's yellow, that's something you have to do. Same process. Okay, you just have to make sure the owner and insured are the same person, except for in a juvenile, and you will only be able to add the social. If you're familiar with the application right now, with when you do a term or a whole life or an IUL Flex Life, it will say, do they have a social? And if you put no, it will say, what do they have? And that's when you can put the E10 or a green card. Not here, okay, only a social. And then here's something that's a little bit quirky with the application. The beneficiary is automatically set to the policy owner's estate. Unless it's a juvenile, then it's the parents. You can change that, okay? I'll show you here in a second. Again, this is for application process. It will automatically default to the policy owner's estate, but I will show you that you can change that here in a second. So we've done the illustration, we've done the application, we've sent it off for decision. Okay, you're going to have 3 possible outcomes. Number 1, approved. Right there, you get the policy bound immediately. Number 2, it might tell you you're ineligible for this product. Try a different product. Or 3, you're just flat out declined, which means you wouldn't be able to get any policy with NLG, okay, or any product. Excuse me. So you'll get those 3. If you do get the ineligible for the RapidProtect, it does not automatically kick you to the Flex Life. You then have to go in and do the full Flex Life application. Okay, so you'll have to tell your client, hey, you don't qualify for this product because of the process. Let's go to the other product and see if you qualify there. Now, if there is a rate class or if any of the ABRs might need to be removed, that will be separate from the death benefit. So when you get the decision, the NLG is saying you are approved at this death benefit, and then if there's a rate class, it will tell you within 24 hours via email. Okay. Because y'all know that, y'all seen it, NLG, if there is a substandard rating, there are sometimes they will take away some of those living benefits. So we have the decision, we go to delivery. If it is issued as applied, so you apply and it gets issued just how you sent it in, you'll get an email that it's been approved and the e-delivery process will start right then and there. If it is not approved as applied, okay, so it comes back substandard or something, you'll get a notification saying what the new rate class is and what the new premium requirement is. If the premium is sufficient, it will start the process right away. If the premium is not sufficient and they need to increase the premium, it will start the e-delivery process, but the premium will not be drafted until after 10 days, calendar days. Okay, not business days, 10 calendar days. That will allow you time to tell the client, hey, premium has gone up to this. Okay, but you'll get that new premium and how you can draft it sooner if you need to. Okay, so you don't have to wait that 10 days. You'll get instructions on how to get it drafted right away as soon as you get approval from the client. Okay. And if they don't want the policy, all you have to do is notify NLG and then it will go into not taken status. So once we've issued it, once we've done the delivery, okay, you verify the consumer got everything, the client got everything, they signed everything via e-delivery. Make sure they set up their customer account because remember, RapidProtect is all digital. Everything's done electronically. And here is where you can update the beneficiary. You can see here at issue, the estate is default unless it's a juvenile. You can change it via the customer website that simply. So again, you can sit there and do everything with them. Illustration, application, approval, delivery, everything. And then you can help them set up their portal. And then they can go in there and change the beneficiary. They can change the payment frequency. So if they don't want it to be monthly, they want to change it to annually, they can do everything there. And if you have to do a 1035 because you're replacing something, you'll do it after issue. So this is where it's a little bit different in the process than the Flex Life or a term, or where after issue is where you'll actually change the beneficiary to the spouse or the kids or their local favorite charity because they want to save the sea turtles or whatever the case may be, because they will automatically default to the estate. All right. And if they want to keep it the estate, that's perfectly fine. They just have to have something within their estate that says how this will be paid out. Okay. So we're going to go new illustration, and I'm going to go as slow as possible. If I'm going too fast, go to the Q&A, tell me to slow down. You will not offend me. You'll notice I've already got IUL defaulted, RapidProtect. For anybody, what does NL mean? I make the joke every single time. NL means no loser. Don't select NL. NL is the exact same product, The only difference is the commission structure because that NL product is designed for their captive agents. National Life Group still does have a very small captive group of agents within their home office. So these are the exact same products. The only difference is this NL one is for captives. This one that has nothing is for us. So we're going to select that. Put in the client information. I'm just going to put in 1985. Why not just? All right. Remember, RapidProtect, National Life, just in general, they go closest birthday. So this person is not 41 yet, but because we are 6 months close to their birthday, they're automatically saying 61, okay? Or 41, excuse me. So make sure you put in the date of birth, not necessarily the age, because with NLG, it might be off. So any of y'all familiar with NLG's portal illustrations? Looks very similar, okay? You have minimum death and based on target. You don't have that middle one, that balanced one, like you would on the Flex Life. But again, this product is designed for death benefit. It still builds cash, but it's designed for death benefit. And so most people with this product, because NLG is positioning it as a term replacement or a term alternative, they're going to say, Colby, I need 200,000. I want $500,000. Okay, because remember, RapidProtect only goes up to $500,000. So let's just say they want $250,000. So I'm going to put 250,000. And then we're going to scroll down to premium. Now, remember what I said earlier, that it's going to default to this rapid solve. This rapid solve is the protection-focused premium that will allow you to endow this product to make sure it lasts for at least that 15-year premium protection period. So I'm going to keep it at that for now, okay? But I want to scroll down, and I'm not going to mess with this just yet. But look, here is the distribution section. You can still show loans. You can still solve for income. So although this product is not necessarily designed for income, it doesn't mean it doesn't have cash and you can't do an income. You can, but if at the end of the day they say, Beto, I want as much cash value, I want an income, I want to supplement my retirement, go with the Flex Life. Don't come here, okay? Now I want you to notice I've got this alert, I've got an X. Why is it not showing? And that's because I have to go to the interest rate. I have to remember Flex Life will default. This one will not. Okay, now you can do a preference here. Okay, so you can customize it. You can do everything on the cap focus. It's completely up to you. So if I want to go here and say, yeah, 10% in the fixed strategy, I want 60% in the cap, I want 10% here, and I want 10% here. Let's just change this to 70. You can do this, completely up to you. Okay, I'm not going to say this is how I would do it. I'm just showing an example, or just come here and go cap focus, and 100% will go to this strategy. That's perfectly fine too. You can see here the illustrator rate is 6. Okay, so this is going to illustrate roughly at a 6%. But you can do a combination as well, completely up to you. And now we can come over here on the left-hand side to quick view. And you'll see that for this 41-year-old or 40-year-old, but again, because of date of birth, 41, premium is $195.42 a month. That's $2,300 a year for my $250,000. And notice right now I'm showing paying forever. I will change that here in a second, but notice here's the cash value. And look, it does build cash. So the money that they put in here can be used for cash value in the future. But again, it's primarily designed for the income. I'm sorry, for the death benefit, excuse me, misspoke. So let me go down here. Just like with any one of their other products, I can go over here and say, you know what? I only want to pay it till age 67. So I put that in there. I go to quick view. Notice my premium goes up a little bit because I'm shortening that pay period now. I'm not paying forever. I'm only paying till age 67. So obviously my rapid solve is going to go up some. Now it's 221 a month, which is 2,600 a year. But notice my premium at age 68 stops. So for those that want to stop paying it when they retire, you can design it that way as well. Now, if I want to show an income, and again, I'm prefacing this, it's not designed for income, it's designed for death benefit. But if you wanted to show an income, what you'd have to do, you can't solve for both premium and income. The software can only solve for one thing. So I'd have to come here and change this to it was 221 and change. I'm just going to put 222. Okay. Because again, the premium was 221 and 50 cents or 60 cents. So I'm just going to put 222. And then I can come here to this income section and put solve for income. And what does it do? At age 68, it automatically defaults to income, just like the Flex Life does. And now when I go to Quick View, there's my premium, but look at my income, $4,400 after 27 years. That's not a lot. Why? Because this is not designed for income. It has cash. That's great. But this is not designed for rapid issue protection with some cash value, where the Flex Life is designed for cash value with death benefit. All right. Any questions there? What I can do is just like we do with the Flex Life. A lot of people don't say, "Hey, I want this much death benefit." A lot of people say, "Colby, I want to spend this much money in premium every month." So let's just say they told me I wanted to spend $200 a month. I can go up here and I can do minimum death or based on target. Okay, so I'm just going to go minimum death for now, just so we can see and keep it simple. So now I'm doing $200 every month, minimum death max cash. And notice my death benefit's $128,322. Same thing, everything is the same except no, I'm stopping my payment. I didn't do the income on this one. Everything's the same. All I did is now I'm solving for death benefit instead of solving for premium. Any questions? As a reminder, this is what NLG is positioning as a term alternative. Someone comes to you, they want term. They like the idea of term, but maybe I'm sorry, let me back up. They like the idea of permanent, but maybe they don't think they can afford it. You can always come here to the Rapid Protect, put in the death benefit they want, do the rapid solve. All right. So if you want to make it as cheap as possible, and they say, Carmen, I need 150K of death benefit. All right, so 150K. All you do is rapid solve. And if you want to make it as cheap as you possibly can, put them paying forever. So now my 150K rapid solve paying forever, 150,000 for 119 a month. I don't know what Flex Life would come out to be. I'm not going to sit here and go back to Flex Life and compare. You compare. Just remember this: 119 a month for 150,000 for a 41-year-old. Do the same thing on the Flex Life. See what the premium comes out to be.